Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. All right, everybody. Today we're going to start off with Cheesecake Factory and headlines like these. Cheesecake Factory can't pay the rent. So a lot of you have probably seen where Cheesecake Factory informed their landlords that they weren't going to be able to pay rent on April 1st for all of their storefronts, meaning every location they have, they're not paying rent. This is a big news story because of the coronavirus. So coronavirus has reduced demand significantly for restaurants. A lot of the unemployment rates that you're seeing have to do with people related to the hospitality industry. So restaurants, also the travel industry, airlines, hotels, places like that. So we'll go through some of the Cheesecake Factory headlines, understand what it means for the markets, and understand what it means in general, right? So can you have your cake and eat it too? Cheesecake Factory doesn't think so. So this article talks about, the overall news again of how it's telling landlords they can't pay. But the funny part is, Cheesecake Factory is often cited as one of the favorite tenants for malls. Having a Cheesecake Factory, a Nordstrom, and an Apple location is the perfect combo. Because Cheesecake Factory is able to do so much business and generate so much revenue, this kind of came as a shock to a lot of people that they wouldn't be able to pay rent in April for the upcoming April 1st date. As you can see here, a lot of Cheesecake Factory locations are in malls, primarily Simon Property Group. So they have 29 locations there, and that's who their landlord is Simon Property Group, right, at those locations. And so if they're not able to pay them, then obviously there's a hit to Simon Property Group. Here you can see their income statement. So I was looking through their income statement on a quarterly basis. These are in millions of dollars. And so their revenues in the latest reported quarter, which would have been Q4 of 2019, shows revenue at $694 million. And you can see their expenses right here. Their primary expense is in SG&A, which is their employees, right? So about $100 million in employees, or $100 million in employees for that quarter. And then there's other operating expense, which essentially is other things to kind of keep the business running, right? So those are the expenses there, and it shows from their revenue to their profit. So this cost of revenues is basically cost of goods, meaning how much food costs, all of the things they need to buy in order to sell that food. They generate a profit of around $285 million per quarter. And that was probably their Q4 is usually their busiest quarter, just based off of the fact of the holidays. And so you can see after all of their expenses, they typically have around $27 million per quarter in income. But when you have to pay your employees, and employees are a big percentage of your profit, right? About a third of your profit, if not more. Paying them is very important, right? And so when you aren't generating these revenues, when this number falls dramatically, you aren't able to pay your employees. So other restaurants in the industry are facing the same problem. You can see from Grubhub CEO, they're saying, up to 30% of restaurants could close. That's a huge number, everybody. That indicates that this problem is not just isolated to certain players, and that's Cheesecake Factory is like a lead indicator for businesses and the successful businesses in the restaurant industry. And if they're not able to pay rent, can you imagine what some of these smaller restaurants, your local restaurant, the problems they're facing, and trying to keep people employed and trying to keep their business running. So coronavirus has really taken a big hit on the restaurant business. And so let's look at how that impacts some stocks. Right. So we talked about landlords taking the brunt of that impact. So Simon Property is obviously their their primary landlord or the one where they have the most locations. So Simon Property Group is just being hit left and right. So you not only have restaurants closing down or restaurants not being able to pay their rent, but you also have the malls in general being closed. And so all of those companies, the department stores and the retail shops, just not being able to generate revenue. And so does that mean if Cheesecake Factory can't pay rent, can other tenants in that same mall not pay rent? And that's a big concern for Simon Property Group and all these mall stocks such as MAC, CBO, TCO. The other impact, so Simon Property Group is a REIT, right? Is a retail or a real estate investment trust. And so all of these REITs that are commercial based, right? So they have commercial tenants, they might be impacted as well. And we're looking at, is this going to hit all of the REITs? You can see this was a surprise to many of those landlords that Cheesecake Factory just outright said we're not paying rent. Cheesecake Factory probably has some leverage there because of their size and scale. But like I said, not every tenant is going to be able to pay rent. And how does that affect all of these REITs? And then you have the counter side of this where certain mall tenants or mall landlords are saying you have to pay rent. We can, if you don't pay rent, we'll kick you out, essentially. Just like you or me, right? If we can't pay rent, we face being evicted or foreclosed on. So this is the counterpoint, right? These landlords have to kind of play the strong man here. That even though it's an extraordinary circumstance, they basically told all of their tenants, Taubman told all of their tenants, look, you have to meet your obligations. It's in your contract. If you can't afford rent, we have the right to kick you out. And most importantly, here with the Cheesecake Factory, is the real impact to people, right? So it shows here furloughs thousands of workers as the coronavirus shuts down restaurants. So I believe it's 41,000. Yeah, 41,000 hourly restaurant staffers are being furloughed. So what the furlough typically means is that those folks are not getting paid. They're probably keeping whatever benefits they have, if they have any. And when the business is back up and running, they will essentially start getting paid again. So they're not being laid off, they're not being fired, but they are, they are going to not pay them. And so a lot of these people hopefully have savings. But what this tells me is that we really all need to have backup savings, right? So you hear people say a lot of things about having an emergency fund and being able to cover 3 to 6 months of your basic expenses. And this is why, right? For crises like this, when you just don't know if you'll be laid off or furloughed, hopefully, we're hoping that this coronavirus will not impact all of these shutdowns for a very long extended period of time. But as of now, this is March 30th in 2020, we are facing another month of this, right? So the U.S. government has declared yesterday that the kind of lockdown will go through the end of April. And so that's a long time, right? And a lot of businesses may start laying off more people, right? We saw the jobs report where unemployment requests were up to 3.3 million. I mean, that's a ridiculous number. It doesn't compare to anything else in previous history. I think the previous peak was in the 600,000 range. And so a lot of these workers, like I said, are in restaurants and hospitality and travel industry. And so hopefully we can figure out a plan for them, right? The government has stipulated a large stimulus package, and they are hopefully getting money out to folks as quickly as possible to help with some of their needs. But if this continues to go on, this just emphasizes the need for an emergency fund. And that's something that I personally am going to try to work on this year, is making sure I have all the emergency money that I would need in case I ever got laid off. And so that's something that I encourage all of you to do as well. So we're going to transition here to my portfolio, my passive income portfolio, and talk a little bit about that. If you are enjoying the content, make sure you give me a thumbs up. It really helps the channel to get videos out there to other folks who may not be aware of it. And also, if you really like the channel, feel free to hit subscribe. So let's jump into the portfolio. All right, everybody. So here is my passive income stream, my portfolio for the week. And this shows first, let's look at the overall. So we're still down about 24%. That's a lot better than it was last week, right? The market has kind of shot up quite a bit over the last week. You can see my overall gains are at negative 1,900 or so. Again, that's mostly due to loss in market gains of around 2,100 and earned dividends of 155. So we're sitting at almost 11,000. We're getting back up to where we were essentially before kind of coronavirus hit and took a big toll, but a lot of that is investment cash that I've put in during that time period. So that's why there's still this negative return. If we look at the week, right, so this number might change because the markets are live right now while I'm recording this, but you can see that it was overall a pretty good 5 days, right? There was an improvement of 9% overall in those 5 days, and most of that came from market gains of $874-ish and earned dividends of $13. So, what I think this means for me is, just keep consistently investing. I don't think this bump is the end of the bear market. I really don't. Technically it is, right? Because we had like 3 good days in a row. I think the technical definition is 2 good days in a row. So it was definitely a good time to invest here. But I really do think from all of the news that we just covered, right, that a recession is going to hit, right? A lot of economists are predicting a recession due to the coronavirus, and it's not going to be this quick turnaround like within a week, right? So yes, there was a brief period of increase here, but I think you'll see this number continue to come down over time, at least through Q2, right? So at least through the end of June. I've seen some predictions where it can go down even further through Q3, and the turnaround won't really happen until Q4. Who knows, right? I don't think that's something that's easily predictable because we don't know the extent that the coronavirus will have on the economy, particularly in the U.S. They're saying, with the virus, death toll might peak in 2 to 3 weeks. And so if that's the case, we could turn around by Q3. There's obviously a lot of government intervention here with the $2.2 trillion stimulus package that that Congress has signed, and so there will be a turnaround at some point. It's just a matter of knowing when, and I don't think we'll really be able to predict when. So my advice would be to keep consistently investing. So you can see from my activity here that last Friday was my regular deposit, my bi-weekly deposit, and I have not changed that. I haven't paused that. I'm not. One of the things that I realized is consistency is really the key to seeing long-term gains in the market. So if you look at all of the people who there are simulators that show this, the people who try to time the bottom of markets and invest still typically end up doing worse than people who just consistently invest and consistently are putting money into the market, because there's no way to actually predict lows and highs so accurately. Because if you could, you'd be a billionaire, and most of us aren't billionaires, right? So I think the idea of consistently investing, even when things are going down, especially when things are going down, right? Because you're getting stocks when they're cheap, and that's where you will make up most of your growth in the long-term market. You'll see this. There was an additional deposit here on the 19th. That was just an additional buy that I put in there. You can see a little bit of dividend activity, not too much in March. I think my next video, since we're approaching the end of the month here, will be my monthly review. We'll go through my dividends and see how I did for March overall. But I think, again, consistency. So 2 takeaways from this video this week is have an emergency fund, right? So I know investing right now, having cash to invest right now looks like a great idea because everything's at the bottom, but you really should be prioritizing your emergency fund to cover at least 3 months of your expenses, if not more. That's something that I'm working on. I will keep that money separate from any stock investments. Now, I'm not saying that money doesn't have to do any work. So you should, put it in a high interest savings account or even some particularly stable bonds, or something that, is relatively stable investment so that you're still earning money on it and trying to beat at least inflation. But that money is really reserved for emergencies only. You shouldn't be taking out of that money to invest in the market. So that's takeaway number one. And then takeaway number two is just be consistent in your investing. Make sure that you are putting things in. You're continue to invest when you can, and make sure that you aren't pausing any buys or any of your normal activity due to the decline in the market. Now is actually a really good time to invest. And just stay consistent, because in the long term, that will get you the wins that you want to see and hopefully allow you to have the passive income that you desire. So with that, I'm going to close out the video. Again, hit the like button, hit the subscribe button. I appreciate all of you being here and listening in. Email me with any questions at satelyinvesting@gmail.com, and we will see you again next week.